We're digging into extensive study on international investments today, and the results indicate that Tesla is likely headed toward becoming a $10 business. The current price per share of Tesla stock is $3,369, not tomorrow, not in 10 years. According to Holland's calculations, the value of Tesla stock closed at over $900 per share today, which means that it is currently overpriced by more than $2,200. Put another way, the price of Tesla stock ought to be 3 times higher than it is. It is obvious that this research merits discussion. There is one contentious premise in this study, though. We become more and more in favor of it the more we research and understand its logic. Do you think Tesla stock is overpriced? Is there any chance of a surge in the upcoming months? Now let's watch the video to find out. Recently, an executive summary about the steadily rising value of Tesla stock was made public by Holding Global Investment. They think Tesla has a clear understanding of why it is well positioned to rule the future. Per their estimate, by 2050, yearly of sales are expected to reach 206 million due to restrictions and the popularity of EVs in developing nations. In the upcoming 10 years, Tesla is expected to account for 25% of EV sales due to its edge over competitors as the first mover. Higher profit margins and substantial cash reserves are provided by Tesla's significant manufacturing edge over established and emerging EV brands, which supports continuous innovation. Tesla has an advantage over its rivals thanks to its fully integrated energy generation and storage technologies. To reduce the cost of operating EVs, Tesla intends to reduce the cost of lithium batteries. Holland thinks that investors have a once-in-a-generation chance to purchase Tesla shares at current prices, which have significant upside potential. According to Holland's research, Tesla is currently valued at $3,369 per share based on its 30-year discounted cash flow forecast. Tesla is able to meet its long-term financial projections. Their estimate for Tesla rises to $6,244 in 2030 and then to $9,056 in 2040. Their appraisal is dependent on the most contentious premise in the entire report. The corporation will profit from a doubling of worldwide passenger vehicle sales to 206 million vehicles by 2050 based on their 30-year global demand model. It is anticipated that most governments would outlaw the usage of internal combustion engine vehicles by 2050, and that sales of these vehicles will be prohibited internationally by 2040. Holland predicts that during the next 30 years, developing markets will account for 75% of the global demand for electric vehicles. Over 1 billion individuals will be able to purchase an electric vehicle for the first time because to growing disposable incomes and 40% growth in the population of developing markets. Over the next 30 years, China and India will account for 40% of e-sales. The increasing number of billions of people in the economy will essentially cause the global car market to quadruple. According to Holland, Tesla will produce about 5.5 million cars by 2025 and account for more than 20% of passenger vehicle sales worldwide during the next 10 years. Few investors are aware of the tremendous challenges associated with transitioning from the production of internal combustion engine vehicles to electric vehicles. Tesla's reduced lithium battery costs will result in a reduction of EV running costs. In the following 3 years, Tesla hopes to reduce the cost of lithium batteries by more than 50%. Currently, the balance sheets of Tesla's primary rivals, including Ford, General Motors, and Toyota, show nearly $900 billion in debt. Holland's financial and valuation projections indicate that the annual production of automobiles will reach 34.2 million electric vehicles in 2040, and that the total revenue generated by these vehicles would reach $2 per trillion by 2039 and $3 trillion by 2047. Additionally, they predict that free cash flow will hit $500 billion annually in 2037 and will surpass $1 trillion starting in 2047. Tesla may utilize this massive cash pile to explore business ventures outside of its present electric vehicle and energy aspirations. Holland thinks Tesla will have to start paying dividends by 2025. Based on some really optimistic predictions, they view Tesla as a necessary component of any investing portfolio. Over the next 20 to 30 years, the largest investment opportunity is expected to be an electric vehicle replacement of internal combustion engine vehicles worldwide, along with accompanying investments in renewable energy and infrastructure, EV charging networks, and energy storage technologies. Global EV sales are predicted to increase to 206 million vehicles by 2049. from 86.4 million vehicles annually in 2035. There would be deadlines for the worldwide removal of practically all vehicles with combustion engines as 2050 drew near, already over the next 20 years. Demand for EVs is expected to skyrocket. Over the course of the next 30 years, GDP growth in developing economies will be noticeably higher than in developed ones. By 2050, car ownership is projected to increase from 10 to 30 due to increased per capita wealth. Holland anticipates that by 2050, there will be about 2 billion electric vehicles on the road worldwide. With 2022 to the worldwide EV market, Tesla is expected to rule the EV industry for the next 30 years. According to Holland's demand estimate, Tesla is expected to sell 5.5 million electric vehicles annually by 2025, 14.85 million by 2030, and 34.1 million annually by 2040. Additionally, they think that the majority of the present manufacturers of internal combustion engines are clearly destined for failure and will not be able to transition to electric vehicles. In conclusion, Tesla will be able to start paying dividends by 2025 thanks to its free cash flow accumulation starting in 2025. Taking into account Holland's estimate, it is thought that Tesla ought to be a staple asset in every financial portfolio. The biggest investment opportunity over the next 2 to 3 decades is thought to be the global switch to electric vehicles and the associated expenditures in infrastructure and renewable energy. How do you feel about Holland's estimate?